You're faced with all of these amazing strategies. The question is, how do you pick what to automate? First of all, on our AlgoBots page, we are going to want to seek out key data points. So let's look at the 7-day and the 30-day performance. This shows how our bot has been doing recently. These should be green and reasonable to ensure the bot is performing well as of recent times. For example, the 7-day performance should be above 1% and the 30-day performance should be greater than 5%. We confirm this performance due to the fact markets go through phases. They trend, they change behavior, and they are impacted by external factors. We want to ensure our selected bot is adapted and suiting this phase of the market. The next thing we should be looking at is the equity curves. One of the most important things to consider is that it doesn't have to be perfect. Naturally, no strategy will win 100% of its trades, so we will always see a few dips here and there. But as long as we are seeing the strategy produce returns, this is great. For some strategies, by design, you might see the equity curve range and go sideways for a duration. They might be strategies that are waiting for the perfect move and are steadily holding themselves. This can be the case for both reversal and trend following strategies, as they actively manage your positions. By clicking the chart icon to the right, we can open up a deeper analysis of each strategy. Here, we can see the launch date of the strategy, showing how it's performed since it was added to PrimeAutomation, a forward test of sorts. Ensuring this also reflects a strong performance is key. This reveals how the strategy is performing in the live markets. Within this analysis panel, we can also see volatility and the method. A trader who wants more slow, consistent gains might want a trend-based, medium, or low volatility strategy, a set and forget style. A trader who wants to try and catch altcoins pumping might want reversal, high volatility strats. There is also a third type of strategy, multi-strategy, which works on both reversals and trend following methodologies, giving traders the best of both worlds, catching early moves and also following trends. It can be extremely smart to select a mix of the three. Just as a trader doesn't go all in on a single asset, you shouldn't go all in on a single bot or trading style. For example, we could allocate 50% of our funds to this trend following medium risk Bitcoin strat to help us with the macro market. The rest of our portfolio could consist of 5 altcoin strats of varying volatility and methods to provide those sharp moves. Adding in some reversal strategies with trend following ones with varying volatility and frequency can help your system adapt to all market conditions. Generally, we suggest aiming to have between 5 and 10 strategies running, so you are as diversified as possible. Here's another example. Take the Aero USDT Mirage 30-minute strategy. By opening up our deeper data analysis, we can see this is a trend-based, medium volatility, high win rate strategy with a superb backtest and forward test. This medium volatility ensures we never take large hits, such as 50% reductions of our capital, and it's designed to balance risk and reward. This is something we might want to designate a larger percentage of our portfolio towards, especially if it's an asset we like to trade. However, it's key to balance this with other strats. Take our Doge USDT strategy, for example, where we see both sharp upward moves and also sharp downwards ones. We have the ability to make higher gains at the cost of higher volatility. We can add multiple varying other strategies like this to protect ourselves in all market conditions. For unlimited plus users, you of course have our AI bots that serve as an even more dynamic approach to the market that smartly learn and manage risk as you go. Making these a large chunk of your portfolio can be a very smart approach. PrimeAutomation also contains grid bots specifically to trade market ranges. Adding in some of these in order to balance your portfolio to deal with all market conditions can help give a further edge. By mixing and matching strategies and assets to complement each other, you can allow your portfolio to adapt to all market conditions and let you sit back, relax, and automate smarter. Considering timeframes and frequency when automating is also key. Just like trading manually, advantages lie with both long and short-term strategies. Long-term strategies generally can offer a more steady, mature price action that allows a more set and forget approach. These are ones that run over months and can help you beat the market. They consider more volume, larger market participants, and can just be more mature in general. See here, for example, our MNT USDT strategy that operates on the 1 hour, catching reversals on a macro scale. Shorter term strategies such as the 5-minute and 15-minute offer faster gains potentially and can adapt to fast pumps and dumps. They won't consider such large data sets but can have the advantage of balancing a portfolio. PrimeAutomation also provides a trade frequency value that gives you a realistic expectation of how frequently the bot is going to take trades. A 15-minute high frequency bot will take trades very rapidly on the 15-minute chart, whereas a 4-hour medium frequency bot would take trades on the 4-hour chart on a more mid-sized move approach. Combining both some high time frame, low frequency strategies and lower time frame, high frequency ones offers the ability to trade with the market as it moves while catching those fast short-term moves that we know and love in crypto. At the end of the day, selecting from PrimeAutomation's wide variety of strategies and finding the ones that work for you offers an all-in-one automatic trading solution. Employing a good mix of strategies is always a good idea as it keeps you diversified and better protects you against volatile markets. Once you've got comfortable with your setup, you are able to increase position sizes as needed, and of course, don't forget to take profit as you go. Up next in this series is position sizing and how to know when to cut a bot.